Welcome to the review session on BRS. Before I get started with the questions, I'll give you I'll tell you something in brief about what this chapter is all about. What is BRS? See, BRS is Bank Reconciliation Statement. The bank reconciliation statement is prepared as at a particular date. The BRS is not part of a financial statements. It is a control tool. When we prepare a bank reconciliation statement, what we are trying to reconcile is the balance as per the bank statement and the balance as shown in the bank column of the cash book. Ideally, the balance as per the cash book and the balance as per the passbook or the bank statement should be the same. But because of timing differences or because of errors and omissions either on part of the customer or on part of the bank, it is likely that the balance as per the cash book is not the same as the balance as per passbook, and hence the necessity to prepare a bank reconciliation statement. And as I told you, the reasons could be either the reasons for the difference between the balances could be because of timing differences or because of errors and omissions. Timing differences means checks are issued by us, but they are not yet presented by the person to whom we have issued in the bank. So in that case, what happens is, the moment we issue a check, we debit the person to whom we have issued the check and we credit our cash account. So the cash balance comes down, or the balance as per the cash book comes down immediately, but till such time the person actually presents the check and our account with the bank gets debited, the bank balance will continue to show a higher balance. Similarly, when we receive a check, the moment we receive a check, we will debit our cash book and credit the customer's account, but only when the check is deposited with the bank and it goes through the clearing process will our account with the bank get credited and the balance as per bank will increase. Till such time, the balance as per the cash book will be higher than the balance as per passbook. Now, examples of omissions and errors would mean, suppose the bank has debited our account or it has charged our account with bank charges. We will not come to know of it unless we get an intimation from the bank or we actually receive the bank statement either through electronic form or in a physical form. Till such time, the cash book balance will be higher than the passbook balance. So these are the possible reasons for differences between the cash book and the passbook. And again, what is pertinent is that the cash book is a mirror image of the passbook. That is, when we receive a check, we debit cash and credit the customer, because for us cash is an asset or bank balance is an asset, and so we debit the asset when the balance goes up, right? So when we deposit the check with the bank, for the bank, our account with the bank is a liability for the bank. Okay, it is a deposit that we have made with the bank, and for the bank, deposits that the bank receives from its customers is a liability for the bank, and hence it will credit our account when we deposit money into the bank. And so every debit in our cash book will be matched by a credit in the passbook, and every credit in the cash book will be matched by a debit in the passbook. So this is what I meant when I said that the cash book is a mirror image of the passbook. And so if the cash book shows a debit balance, it is a favorable balance, and the passbook will show a credit balance, which is a favorable balance. If the cash book shows a credit balance, which is an unfavorable balance, and the passbook will show a debit balance, which is an unfavorable balance. By unfavorable, I mean overdrawn balance. So with this in mind, let's look at the problems. First problem is, credit balance in the cash book means. So when there is a credit balance in the passbook, in the cash book, it means that there is an overdraft as per the passbook. So answer is A. Bank reconciliation statement is A, a part of cash book, B, a ledger account, It's a statement showing the causes of difference between the cash book and the passbook, neither of the three, right? So here it is C. Answer is C, because BRS is not part of the cash book, it's not a ledger account, it's only a statement that shows the reasons for the difference between the cash book and the passbook. A BRS is prepared with the help of, yes, when we prepare a BRS, what we are trying to compare is the balance as per the bank statement and the balance as per the bank column of the cash book. So the answer is C, bank column of the cash book and the bank, sorry, answer is A, bank statement and the bank column of the cash book. A BRS is prepared to know the causes for the difference between the balance as per the bank column of the cash book and the passbook. So answer is B. Yes, 5, it's a repetition of question number 4. A BRS is prepared to reconcile the difference between the balance as per the bank column of the cash book and the passbook. Payment received by the account holder through a check is entered where? Entered in the passbook at the time of receipt of check, in the cash book at the time of collection of check, in the passbook at the time of collection of check, none of these. So when the account holder receives a check, right, it is entered in the cash book at the time of receipt of check and it is entered in the passbook only at the time of collection of check. Okay, so there could be a difference between receipt of check and collection of check, which ultimately leads to a timing difference and a difference in the balance between the passbook and the cash book. So here the answer is C. Direct payment received from third party on behalf of account holder is entered in A, the cash book when the amount is received by the bank, the passbook when the amount is received by the bank, the cash book when entry is posted in the passbook, none of these. So when a third party directly pays into our account, then it gets entered in the passbook at the time when the amount is received by the bank, and the entry will be subsequently made in the cash book only when an intimation is received to the customer or to the account holder by the customer or by the bank. Okay, so answer is B. A check of 2345 issued by Miss Meena was recorded in the deposit column as 2345. Okay, to ascertain, it should be 2435, sorry, it was written as 2435, and to ascertain the balance as per cash book of Miss Meena, what should we do? So here a check which was issued, instead of recording it in the withdrawal column, it was recorded in the deposit column wrongly by the bank, which means the bank statement, the balance as per the bank statement is higher than the balance as per the cash book. And so since we are moving from a higher balance to a lower balance, we have to subtract 2345 plus 2435. So 4780 should be subtracted from the balance as per passbook. Next question. Debit balance as per cash book of ABC Enterprises as on 31/3/2007 is rupees 3000. Okay, so debit balance means it's a favorable balance. Checks deposited but not cleared amounts to rupees 200, and checks issued but not presented of rupees 300. Okay. So let's look at, see, ultimately we want to find out the balance as per passbook. So we look at each one of these adjustments. So we are starting with a favorable balance as per cash book of rupees 3000. Checks deposited but not cleared amounts to 200, means checks have been deposited, have not yet been cleared, implies that the balance as per cash book is higher than the balance as per passbook, and so we have to subtract 200. So now we come to 2800. Checks issued but not presented, which means cash book balance is less, passbook balance is more, we have to add 300. So now to 2800 we have to add 300, we get 3100. The bank allowed interest amounting to rupees 100, which means 100 rupees has been credited to our bank account. The bank has credited some interest to our account, and so the balance as per passbook is higher, the balance as per cash book is less. So we have to add 100 to the balance of the cash book. So now we are at 3200. and collected dividend of 100 on behalf of ABC, which means again there is a credit of 100 to our passbook, and so we have to add 100 to our cash book balance. Thus far we have arrived at 3200 as the balance as per passbook. We have to add 100, which will give us 3300. So the balance as per passbook should be 3300. While preparing a BRS, taking the balance as per cash book as the starting point, checks deposited but omitted to be recorded are to be, yes. So here we are starting with the balance as per cash book. Checks have been deposited but omitted to be recorded. Okay, so which means the cash book balance has not yet recorded the checks received. So we have to add the amount of checks received to the cash book balance. Next, while preparing a BRS, taking the balance as per cash book as the starting point, an undercast of bank column on debit side of cash book, yes. So which means the debit side of the cash book is undercast. The debit side in the cash book records the receipts. When there is an undercast of receipts, it means that the balance is undercast, and so we have to add the undercast. Next question. While preparing a BRS, taking the balance as per cash book as the starting point, an undercast of bank column on the credit side of the cash book. Okay, so the credit side of the cash book records payments. So when there is an undercast of payments, it means that the balance is overcast, and so we have to subtract the undercast to find out the correct balance. Next, while preparing a BRS, taking the balance as per cash book as the starting point, debit balance of 112 has been brought forward as credit balance of 121. Okay, so how do we rectify this error? Which means you should have started with a positive balance of 112, but you are showing your balance as minus 121, which means we have to convert minus 121 to plus 112, which means we have to add 233 to minus 121 to make it a favorable balance of 112. So we have to add 233. Next, while preparing a BRS, taking the balance as per cash book as the starting point, a wrong credit in the passbook. Yes, when there is a wrong credit in the passbook, it means that the balance as per passbook is higher than the balance as per the cash book. So we are starting with the balance as per cash book and arriving at the balance as per passbook. So we have to add the wrong credit in the passbook. Next, while preparing a BRS, taking the balance as per cash book as the starting point, a wrong debit in the passbook. So when there is a wrong debit in the passbook, it means that the balance as per passbook is understated than the balance as per the cash book. And since we are starting with the balance as per cash book, we have to subtract the wrong debit. Next, while preparing a BRS, taking the balance as per cash book as the starting point, an undercast of deposit column in passbook. Okay, so there is an undercast of deposit column. It means that the balance as per passbook is less than the balance as per cash book, and since we are starting with the balance as per cash book, we have to subtract the undercast. Next, while preparing a BRS, taking the balance as per cash book as the starting point, an undercast of withdrawal column in passbook. Okay, so there is an undercast of withdrawal column in the passbook, means the balance as per passbook is overcast, and since we are starting with the balance as per cash book, we have to add. Next, one outgoing check of rupees 112 has been recorded as 121 in the cash column in the cash book. Note, the check was presented in the bank when the balance as per cash book is the starting point. Okay, so one outgoing check of 112 has been recorded as 121 in the cash column in the cash book. It means that instead of showing 112 in the bank column of the cash book on the credit side, it has been shown as 112 in the cash column, which means when we are reconciling, starting with the cash book balance as per cash book as the starting point, our cash book balance is, or rather the cash book balance of the bank column Okay, it is higher by 112, and so we have to subtract 112. Next, one outgoing check of 112 was recorded as 121 in the bank column in the cash book. When the balance as per cash book is the starting point, what should we do? So what have we done here? Instead of showing an outgoing check of 112, we have shown it as 121. So we have understated the balance in the cash book by 9 rupees. So when we start with the balance as per cash book, we have to rectify this error by adding 9 to the balance. Next question. The debit balance of 112 as on the previous day was brought forward as a credit balance of 121. Okay, so here this is similar to a problem that we saw. A favorable balance of 112 was brought forward as an unfavorable balance of 121. Okay, so we have to rectify this error and we have to convert the unfavorable balance of 121 to a favorable balance of 112, and so we have to add back 233. The payment side of the cash book bank column was undercast by 112. Okay, so when there is an undercast in the payment side of the cash book, it means that the balance as per the cash book is higher, and so when we have to rectify this error, we have to subtract 112. Next, the receipt side of the cash book was overcast by rupees 112. When the balance as per cash book is the starting point, see, when the receipt side is overcast, it means that the balance as per cash book is higher, and so we have to subtract this 112 in order to arrive at the correct balance as per cash book. Next, a cash discount allowed of rupees 112 was recorded as rupees 121 in the bank column when the balance as per cash book is the starting point. Okay, so we have allowed a cash discount of 112. So we allow a cash discount only when we collect money from our debtors, and instead of showing 112 in the discount allowed column of the cash book, it was shown as a receipt in the bank column as 121. So it means that the balance as per the cash book is higher by 121. So when we rectify this, we have to subtract 121. So the answer is B. Next question. Deposit column of passbook showed a wrong entry of 112 when the balance as per cash book is the starting point. Okay, so there is a wrong entry of 112 in the deposit column of the passbook. It means that the balance as per the passbook is overstated when compared to the balance as per cash book, and when we are starting with the balance as per cash book, we have to move from a lower number to a higher number, and so we have to add 112. Next, withdrawal column of the passbook showed a wrong entry of rupees 112 when the balance as per cash book is the starting point. Okay, so the withdrawal column is showing a wrong entry of 112. It means that the balance as per passbook is less than the balance as per the cash book, and so when we are starting with the balance as per cash book, we have to subtract 112. Next, which of the following items is to be adjusted in the amended cash book? Right, so I'll just tell you what this amended cash book means. Amended cash book means cash book that has been adjusted, or cash book balance that has been amended for all the errors and omissions made by the customer. Okay, so amended cash book, the balance of cash that is to be shown in the balance sheet will be the balance as per the amended cash book. So there is an option to start the BRS with balance as per the cash book, or to start with the balance as per the amended cash book. So when we start with the balance as per cash book and we try to reconcile it with the balance as per passbook, then we'll be listing out all the differences that have given rise to this difference between the two balances. This will include not only the timing differences but also differences arising because of errors and omissions both on part of the customer and on part of the bank. But when we start with the balance as per the amended cash book, we would have already taken into account the errors and the omissions that the customer has made at his end. And so the BRS, when started with the balance as per the amended cash book, will have only items of timing differences and errors by the bank. Okay. So let's look at question 26. It says, which of the following items is to be adjusted in the amended cash book? Okay, so as I told you, in the amended cash book, what we will adjust is only the errors that have been made or the omissions that have been made by the customer at his end. So uncollected checks is a timing difference, unpresented checks is a timing difference, a wrong entry in the passbook cannot be rectified by us, and so option D is the correct answer. A correct entry in the passbook but not appearing in the cash book. So answer is D. For example, let us say the bank has credited us with some amount as interest or dividend, but it is not appearing in the cash book. So we have to make an entry for that income in our cash book to find out the amended cash balance. Next, which of the following items is not to be adjusted in the amended cash book? Right, which of the following is not to be adjusted? See, bank charges and interest charged by the bank is to be adjusted in the amended cash book. Interest allowed and direct payments by the bank, that is also to be adjusted in the amended cash book. Direct payment by our debtors into the bank, yes, that is also to be adjusted in the amended cash book. But option D, a wrong entry in the passbook, is an error by the bank and hence will not be adjusted in the amended cash book. It will appear in the bank reconciliation statement. Next, which of the following items is to appear in the BRS if the balance as per amended cash book is taken as a starting point? Okay, which means here we are preparing a BRS and we are starting with the amended cash book balance. Option A, bank charges and interest charged by the bank. No, this we would have already taken into account when we calculate the amended cash book balance. B, interest allowed and direct payments by the bank. This will also be considered to calculate the amended cash book balance. Direct payment by our debtors into the bank, this will also be considered when we calculate the amended cash book balance. So we are left with option D, a wrong entry in the passbook will appear in the BRS. Question 29. Which of the following items is not to appear in the BRS if the balance as per amended cash book is taken as the starting point? Is not to appear. Okay, so which means we have to find out the item that we are going to consider in the amended cash book or in the cash book in order to find out the amended cash book balance. So option is D, a correct entry in the passbook but not appearing in the cash book should not appear in the BRS if we start with the amended cash book balance. So the answer is D. Right, so that was the last question. So with this we come to the end of the review session on bank reconciliation statement. So in case you have any queries, please feel free to get in touch with me at queries@greymatteracademics.com. So till next time, goodbye.